Good morning, everybody, and welcome to the Daily Energy Markets podcast. It is Tuesday, February the 14th. Happy Valentine's Day to everybody. The chocolates are in the post. Oh, no, that's New Year's resolution 17. The chocolates are not in the post. The virtual chocolates are in the post. They are on everybody's New Year's resolution list. But we are trading in Asia today, a little bit down. Brent and WTI. Brent at 86.11 and WTI just below $80. Again, that sort of price point in which the markets have been sort of stuck, even with the big news at the end of last week that Russia would cut 500,000 barrels a day. The market kind of rallied on it, but ultimately just sort of returned to the same range it has been in for a while. Let's kick off this morning with Dr. Charles Elinas, CEO of Cyprus Natural Hydrocarbons and a senior fellow at the Global Energy Center Atlantic Council. Dr. Charles, it feels this morning like the whole world is collectively holding their breath for this U.S. core inflation number that is due out today. Should the energy markets be concerned?
Well, at least the stock exchanges have been optimistic. So all of them went up yesterday significantly. So they are expecting good results, good news, even though some of the news coming out of the press is that the reduction, there is going to be a reduction, but not as high as one would have expected. So in general, I think the news will be good, yes.
Andy Levin, COO of Sahara Energy Resources. Good morning, Andy. I mean, from the point of view of where inflation goes, and i.e. the Fed and the central bank policymakers continue their robust tackling of this. Of course, in Europe, it's still nearer 10% than 5%. But Andy, from the point of view of whether there is a continuation of the robust tightening or we continue to ease, does that have a relevance to demand?
Good morning, Sean. It does to an extent, but I think for me, it's a bit, in terms of oil demand, it's a bit of a secondary issue. I think there's broader concerns as to what's going to happen with demand. If you look at Pakistan is on the verge of default, which is a very difficult place for it to be. That's a much bigger issue than kind of the impact that inflation would have. I think inflation is a dampening impact in terms of demand, but there are other bigger things going on that give more concern to demand side.
Let's welcome Clara Tan, Singapore Bureau Chief, Gas and LNG Service at Energy Intelligence. Clara, does Asia even care about what the Fed does at this point, or what inflation is in the US, when in Asia, China's reopening, there's demand for everything again, China coming back? Apparently the news today that China is going to do a big deal with Qatar, a long-term LNG deal. Are we going to see China come back into that LNG market and immune to where inflation goes in the West?
Thanks for the question, Sean. Good to be here. Yes, everyone is watching to see what China would do, whether its LNG demand would rebound after the Chinese New Year and after the sudden easing of the zero COVID policy. And what we are seeing now is the spot LNG prices in Asia have fallen for quite a number of weeks already to the mid-teens. I think it's around like $15 or so. But we are not seeing the Chinese buyers coming back in the spot market, at least for now. Although CNOOC has issued one tender a few days ago for a 1-year tender. But based on our conversations with our sources, that is mainly more for attempt to test the market, check where the prices are, and more for trading purposes rather than to meet any incremental Chinese demand for LNG. Yes, it's interesting that PetroChina could be back to sign a new long-term contract with Qatar. This would follow the recent big contract that Sinopec, the other Chinese buyer, has signed with Qatar. And we believe that this also demonstrates the Chinese interest to invest in the Qatar Northfield East project, phase 1 of 4 trains that would start in 2026. And Qatar has always said it is in conversations with Asian buyers who could be a value-added partner in this NFE project. And with the imminent deals signed by the Chinese buyers and already one signed by one of the major buyers, we believe that Chinese buyers will be in a good position now to be one of the VAP value-added partner project in this project.
Dr. Charles, another big story that, of course, is capturing all of our attention is a terrible tragedy in Turkey and Syria of the earthquake. Sort of looking a little bit through the immediate tragedy, obviously, of what it is. Do you think we sort of move a week or more now away from the event itself and we start to look at what are the implications of this massive disruption, dislocation? Where do you see some of the regional, perhaps geopolitical or otherwise consequences of this event?
Indeed, that is happening, Sean, already. I mean, first of all, on the geopolitical side, the Greek foreign minister visited Turkey, and because there is a substantial Greek contingent helping with the rescue operation, and his visit was taken very, very positively. You could see him and the Turkish foreign minister embracing on TV and almost kissing each other. And the news media in Turkey covered that very positively. So that has helped the geopolitics a little bit. But within Turkey, at the moment, there is a lot of introspection, and President Erdogan is getting a lot of flack because it appears that not that long ago he was instrumental in approving substandard buildings to come into use, and those buildings have collapsed simply because the contractors didn't follow the rules, the inspectors didn't apply the rules, and the buildings, which are supposed to be resistant to earthquakes, it just collapsed like a pack of cards. I mean, some of them just toppled over. So the implications on President Erdogan are just unraveling. How far that will go, I don't know. And the big question is that, is he going to hold the elections in Turkey in May that he announced, or is he now going to use this as a reason, as an excuse to delay the elections substantially? Because if he holds elections in May, with the backlash about what happened, the number of dead increasing every day, he is likely to lose.
But of course, he was only last week before this event happened, he was on track to have a big re-election success. That's right.
I mean, he was preparing the ground. The opposition was fragmented. The opposition couldn't come together to challenge him, even though until the end of last year, the opposition was polling higher than him. Nevertheless, he managed to steal the lead. But now this earthquake is having dire implications. It's even newscasters on Turkish TV are publicly talking about the problems and Erdogan's role in the problems. So it's not going to be easy for him. Let's see whether he actually holds the elections. I'm doubtful that he will. Nothing has been said, because obviously, like right now, it's a sensitive issue. But there is a huge backlash. Here in Cyprus, where I'm at the moment, there was a team of young kids between 12 and 14 that went to Turkey to play basketball, I believe. And all of them were, about 20 of them, all of them died. So the whole of the north of Cyprus is in mourning. It's pretty awful. It's pretty bad. The news in the region is devastating.
Wow, that is amongst the long list of very tragic stories. Andy, to sort of segue away from that and into the big bad world of corporate profits, you probably wish you maybe still worked for BP when they reported $27 billion of profit, more than doubled in 2022. And somewhat quietly, it sort of passed last week as all of these massive bumper profits were reported, 40 billion for Shell. there was also the small print where they kind of moved away from this big commitment they had previously made towards the transition. The BP in particular noted, given how big it had swung in towards tackling or towards the new lower carbon fuels and etc., whereas the American peer group had not done that. How do you interpret some of those announcements in sort of backing away from the climate targets?
How long have you got? I think
well, 2.5 minutes.
The challenge for the majors is they have a well-established business model, and it has demonstrably proved to be exceptionally good when prices rise. And it is very difficult to keep your shareholders on board to walk away from that. And I think, you know, from a personal perspective, if you were truly bought into the concept of we need to invest in the energy transition and transition our business model to something that is lower carbon, what a better time to do it than now when you've made record profits. So I think, unfortunately, you know, the short-termism has hidden it. But I think personally, I would have to say, I hope it comes back to bite, because I think it will either come back in terms of windfall taxes, or it'll come back in terms of, guys, you know, people like Greenpeace saying they're not doing what they said that we're going to do. And we told you, you shouldn't trust them. So I don't think it actually was a very good move to do it at the same time as demonstrating that you make an enormous amount of money out of selling oil and gas.
Does it indicate, I mean, the big question of last year and much to the sort of most articulated frustration of President Joe Biden, that the majors had not been putting enough money in the ground to develop and expand their oil and gas capacity? Sort of in a contrarian sense, is this good news for what he's calling for, that maybe now they will put more in the ground for expanding for future supply?
Personally, no, I don't think it makes the slightest bit of difference. It's about giving money back to the shareholders. Because if you invest in the upstream, it's going to take 7 years. You know, the cycle time on an upstream project is a significant period of time. And then you've got to worry about your payback from it. So you have to think about, where do I think this business is going? Do I think I should be investing billions of dollars in another 500 million barrel field that isn't going to pay back for 20 years? Oh, and that's if we even want to use oil and gas in 20 years' time. So to me, if you look at the oil majors that are predominantly outside the Middle East versus the NOCs, the economics are very, very different to even today, despite the major profits they're making. So the simple answer is no, I don't think it changes the dynamics at all.
In terms of where things are going in Asia, Clara, and particularly around the gas, we saw some of the annual data points coming out about how much Europe had reduced its gas consumption last year, how much Russia had exports of natural gas had declined. I think the number was 25% on the year. What does that mean? Where are we seeing that emerge in Asia now as we go into the second year of this? And this kind of gets bedded in as being something, you know, not temporary. Does Asia stand to be the big winner here on the gas side? Is there outlook for further development of pipeline, or do they have to sort of see the opportunity on LNG? I'm just curious to get your views of where, if we bed in this is going to be for the long term, where does Asia win in terms of gas supply, both pipe and LNG?
Well, in terms of LNG, we know that Asia LNG imports suffered in 2022. And the only countries which recorded growth in LNG imports in 2022 in Asia, I think there was Taiwan and Thailand. And the rest of the region, imports just fell and tumbled 20% in China. And some of the emerging markets which were supposed to import LNG in 2022, like Vietnam, like Philippines, they had to delay their projects to 2023. So let's hope they will really do that. But I think the growth story is still gas in Asia. I think many governments and companies are seeing the transitional role of gas in the energy transition strategy to carbon neutral. So the region domestic gas production is on a decline. And that is why they need LNG imports to supplement the domestic production. Countries like Thailand, like Indonesia, and in India and China, they're trying to boost their gas production. And China is seeing some success. We are seeing like 5 to 6% growth annually in the gas production, which is good, which is also a reason why they have been reducing importing less LNG, because the focus for Beijing has been on indigenous resources rather than relying too much on imports. So I think, but depends on price levels. I think affordability, energy availability, energy transition, sustainability, all these would have to be balanced by the governments.
On that point of affordability, of course, LNG last year was the most expensive thing it was in the world, probably more valuable than gold, literally. This year, of course, as you said in your earlier comment, the price point has declined dramatically back to around $15 per MMBTU. And does that open the gateway to those countries in Asia come back into the LNG market, even consider something that they haven't done before, which is build a permanent onshore infrastructure? We still have Bangladesh and Pakistan being serviced through floating regasification units.
Yes, I think the easing of prices have brought some buyers back. At least in the spot market, we are seeing the gas-reliant countries like Bangladesh and Thailand and some Korean buyers coming back to the spot market when the prices fell below $20, but not the big Indian or Chinese buyers at this point. In terms of regasification projects, I think it really depends on whether they can secure long-term LNG supplies at an affordable price, because some sellers could be focusing on the European markets, for instance, and whether or not they would, the buyers will be able to secure an affordable oil link pricing. That is something that I think all the buyers are trying to achieve now, talking to the sellers before they meet a long-term commitment to regasification projects, because that is supposed to be like at least 10 years or 15 years.
Dr. Charles, meanwhile, in Europe, we have the European energy crisis. The bill for all of this is coming to near $800 billion. It was announced by, or euros rather. Is that more than dollars? That's more than dollars at the moment. But that's as reported. And of course, we have Christine Lagarde now. I had a meeting the other day with the Irish finance minister, who currently chairs the EU finance ministers group, and lobbying for governments in Europe to stop their subsidy on energy that they were so generous in distributing last year. Where does that go forward? And is indeed the European energy crisis over?
Well, yeah, I mean, Europe prematurely declared the crisis over. And I think it's premature simply because prices are down now. Gas prices are down for a number of reasons. One is that gas consumption in Europe last year went down by about 12%. The weather is very mild, but there are now already expectations that the weather is going to worsen during the next month or so. And more gas is going to be used. That means that filling the storages next year, at the end of this year, or after the summer, will be that much more difficult, simply because last year they had access to Russian gas for quite a large part of the year. Europe this time around will not have access to Russian gas. However, they are replacing gas with renewables and coal. So last year, even though gas utilization went down, coal went up 7%, and for the first time, renewable electricity exceeded coal and gas. The pressure on governments in Europe is to become is not to cut down the subsidies altogether. The to become a lot focused and have subsidies focused on vulnerable members of the society. Because even though the price of gas at the moment is just over $50 euros per megawatt hour, it still is quite high. And
it's quite high with the historical average, but of course, relative to last year, it's come down dramatically. And
but 2.5 times higher.
How many?
In comparison to pre-pandemic, it's about 2.5 to 3 times higher.
Okay. But the sort of nightmare scenario doesn't see. I mean, they're getting a lot of good fortune in some regards, the European energy crisis, because as was just shared there from the situation in China, Clara telling us that the Chinese and Asians are not immediately jumping into that LNG spot market and are indeed still diverting cargoes to Europe. So that sort of edge of urgency has been removed.
That's right, and not only that, Sean, there is no more, not much new LNG coming into the markets globally. So if China comes back into the market and starts buying a lot of LNG, competition is going to go back again, and prices will also go high. Europe is not out of it. I mean, Europe seems to be fairly optimistic, I suppose. Having mild weather and sun everywhere helps the spirits to be optimistic, but it's not a solution. I think there are warnings already that after the summer things may be different. So there is concern.
Let's go back to the survey question and sort of the starting point of our conversation this morning, which of course is the big data point to drop later today in the United States. The CPI inflation report generally is expected to reaffirm some of the other more hawkish positions taken that inflation is not over. So my question is, inflation report has the potential to deliver bad news to all financial markets, bar energy. Agree or disagree that energy is kind of looking elsewhere today and not too concerned? Andy, I wanted to get your views on that, but also from a sort of culmination of these comments this morning, that there is a fragility still in this global economic recovery. China's not really back. It's sort of open, but not humming. The European equation is sort of getting ahead of itself. We're not in global recession Armageddon, but still there's not real any great sort of surge of demand on energy. And with Russia announcing a 500,000 barrel a day cut, while maybe is a bit of theater, nonetheless, the oil market shrugged it off. Do you think there's anything in this inflation thing? Why are the energy markets, the oil markets, so nonchalant at the moment?
So I think to a certain extent, you could argue that especially the Fed have been quite successful in terms of their attempted impacts on inflation. Europe not so much, but in reality, inflation per se is not bad. It's the knock-on impact of inflation. So I think as far as the markets are concerned, they want to see the light at the end of the tunnel. They just don't want to be peering off in the distance and see nothing. And I think you can start to see the light at the end of the tunnel. Doesn't mean to say it's going to be easy, but there is light. From the oil market's perspective, to me, it is all about demand, and the world is in a difficult position. It's not easy to see how anybody is going to say, great, we're all back on board and let's head for the hills, because it's not that easy, right? Inflation is a bit of a problem. You've got all the stuff going on in Ukraine still. You've got what's happened in Russia, in Syria and Turkey. It's actually very complicated. So it's much easier to convince yourself, actually, this year is just going to be, how do we balance all these things? And nothing is really going to take off. So I don't see China coming back gangbusters. I can see them doing this and doing this. Some bits will work, some bits won't. And it'll just be a slow progression.
In some ways, it's kind of like a balance, although not robust, the sagging, perhaps economic performance in the OECD and West will be made up from a little bit of China recovery, but all, in either case, nothing too dramatic.
I think that's a very good description.
Clara, I wanted to get your views on a question that's sort of bouncing around for us here in the Middle East, and we've touched on it on occasion here, and that is that Russia's increased oil exports into Asia, an increased position betting into India and China, versus the Saudi and the Arab Gulf states, obviously their biggest customers in Asia as well. Is there room for both going forward, again, with this same kind of concept that this is no longer temporary now as we go into year two? This is bedding in for the 3 to 5 year outlook. Where do those two coexist?
I think for India, the government has said that we will still have the Saudi Arabia and the Middle East Gulf countries as one of our key suppliers. But at the same time, we like to buy from Russia because of the favorable discounts. And they're even talking about partial payments in the UAE currency. So more flexibility in terms of payments. I think there's going to be room for both Russia and the Middle East suppliers, given the both countries' growth and appetite for crude. But of course, India is also talking about Venezuela and not just Russia. So I think the government position is pretty clear on they want both, and they doesn't want to ignore Russia, especially when the prices are favorable for them now. So I think if this persists for the next couple of years, I think we should be seeing this trend will continue in India and China.
Charles, last word to you again with this survey result, and sort of taking that revisiting the question of the earthquake and obviously the immediate challenges of Turkey and Erdogan but what about wider? There was talk obviously between the Turkey playing a role as being an outlet for Russian gas, Central Asia coming back into playing a bigger role in supplying into Europe, perhaps, obviously even in the Bosphorus, and getting the food and grains out of Ukraine to global markets. Where do you see the potential outer rims of this domino effect from this great tragedy, where it could possibly impact?
I'm not so sure it will have a huge impact. Take an example, the BPC pipeline that was shut down for immediately after the earthquakes, but is now back in operation. So I think the rest of the system in Turkey seems to be functioning. It's not coming to a standstill. It's tragic. It's concentrated in the south of Turkey, but I don't think it's stopping everything else. But anything that may involve President Erdogan and his go-between between Russia and the Ukraine and Europe, that may suffer simply because he's now fully occupied with the problems and he cannot really dedicate any time to anything else. Do
you think, for example, he could be, it might have to relent on his opposition to Sweden joining NATO, and his position against NATO expansion it will be weakened because he's going to need the support of Europe going forward?
I don't think he's going to touch that. I think he's going to park that for a while and wait and see later what happens. I don't think his mind is into that at all. So that is not an issue at the moment. That will linger until the dust settles and we see what happens.
Okay, well, we're going to have to leave it there. Oil trading as in the middle 80s on Brent, a little bit down on the morning in Asia. Everything seems to be a little, again, that sort of analogy of being in the doldrums. There's no big wind blowing in any direction, and hence, at least on the oil markets, sitting still. Perhaps if we get some kind of surprise on the upside with this inflation number later today, which could trigger a big shift in the financial markets where more robust rates are become a greater reality, then the outlook for economic growth and recession becomes more likely, and hence then perhaps oil prices could come off on the outlook for weaker demand. We'll have to wait and see, but that's the sort of dot connecting for me with today's data number. Thank you so much, Clara Tan, for joining us on the podcast for the first time. I hope you'll come back. Dr. Charles Elinas in Cyprus, Andrew Levin in Dubai. Thank you all for your words and insights this morning. Have a great day. All the best.
Bye.
Thank you.
Bye-bye.
Goodbye.